in partnership with CommSec.
Joining us from CommSec is Tom Piotrowski. Tom, how are we looking this morning?
Kenny, good morning. Well, we're expected to get off to a solid start this morning. The futures are pointing to an improvement of around 0.5% when we kick off. So that's in contrast to the way that we ended last week. It was a bit of a bumpy session on Friday. We finished down by 0.8, but over the course of last week, the ASX 200 improved by 0.8%. So there's quite a deal of positive momentum established by markets, not only at home, but also around the world. On Wall Street, we saw new record highs there. The S&P 500 improved 0.4%, but in weekly terms it was up 0.9%. So that marks the sixth consecutive weekly improvement that we've seen for the US market. You have to go back to the end of 2023 to see a winning streak of that ilk. The earnings numbers that we've seen in the early part of the US company reporting season have been an important part of sustaining US stock markets. So on Friday, we saw investors respond to Netflix earnings. They were better than expected. The shares improved by about 11%, so they're up by about 63% in year-to-date terms. Apple shares were a little bit firmer as well, up by 1%, helped by news of improving iPhone sales. Where China is concerned, that's been a bit of a bugbear for investors' sales in that neck of the woods in recent times. So as far as the local picture is concerned, as I said, we'll get off to a positive start, but energy stocks are going to come under some pressure today because we've seen oil prices end last week lower, down by about 2% on Friday, Kenny, so that's something to keep an eye on for. But metals prices have improved at the end of last week. So we've seen gold hit a new record high. Silver prices had a big run into the end of the week, up by 6%. So they're currently at their highest levels in about 12 years.
Tom, thank you. Talk to you soon.